We're now moving on to United Technologies Corporation, which manufactures aircraft engines, aerospace systems, aircon units, elevators and escalators. Well, there we go.
Right, so it is in defense contracting, but when you talk about escalators and elevators, that's the Otis business. Yeah. Aircraft engines is Pratt & Whitney. When you get into a commercial airliner, look out the window, you're either going to see a GE mark on the engine or Pratt & Whitney or Rolls-Royce.
Yeah, or Rolls-Royce.
Yeah, big business, big business.
Market cap, $91.6 billion, a PE ratio of 18.1 and a dividend yield of 2.4%. So where do we go with this one?
Look, they sold Sikorsky, I think that's how you pronounced it, helicopters to Honeywell. And Honeywell, in fact, tried to make a hostile bid for the company. It didn't work. Now, selling off the helicopters seemed like a good idea at the time because the demand for helicopters plummeted in 2008 when the oil price and everything fell, because a lot of these helicopters are used to service the offshore oil rigs. I mean, this is a major demand of helicopters in America. But I think it might have been the wrong thing because it's actually a good business over time. But Otis certainly didn't do well in China. The demand for Otis plummeted last year in China. But clearly they've got extremely good product lines. And the one thing you know for sure is that defense promotion by Donald Trump and more money is it is coming.
So let's look at United Technologies from a share price perspective.
What you're going to see is a nice move there in the tail end of 2016. So this is a big company and it's got diverse revenues. It's not as significantly exposed to defense spending as some of the others, except that in the Pratt & Whitney division, apart from aircraft engines for all the Boeing planes, and I think some of the Airbus planes as well, they also manufacture the engine that goes into the F-16, the F-18, the F-22, the F-35, you know, all the fighters, US fighter planes, as well as the long-range bombers. They're also a major player in satellite defense systems. You know, these sort of moon rovers and satellites that go up all have these, you know, very expensive...
And the world is going to need this, considering the changing global political environment.
Exactly. Then there's a big division which does air conditioners, related brands like Carrier belongs to them as well, Noresco, which is a big player in fire detection, and even oil services, so companies that provide services to the oil rigs and related pipelines. You can't imagine. Just a very big, diversified defense and industrial company.
In that diversification, is there opportunity?
I think so as well. And you know, the rating of the stock isn't high. And of course, whether Trump's successful in what I think his most ambitious objective is to weaken the US dollar. If he's successful in it, these companies benefit massively.
They will fly.
Massively.
Well, Carrier, one of their companies, was the one that got in the game early, and where Trump, before he was in the White House, was going there and, you know, making deals with them to not lose 1,000 jobs. And then tweeting about
the deals, etc.
I don't know. I mean, for companies like these that have manufacturing facilities all over the world, I think they're just playing the game. They're just kind of going along with this sort of stuff and taking advantage of these sort of wins as they find them. Of course, they've got customers around the world, so they need to be careful that they don't alienate people and get customers outside of the US in a tiz. But overall, the company looks good. Its earnings growth looks fine, and its ability to deliver on an ongoing basis.
Does it look good enough to call it hot?
I think so. At an 18 PE with a more positive environment with regard to infrastructure spending generally, I think it's hot.
Well, I think you're going to like the PE at 18 as opposed to 28. So hot.
And it's important what we spoke about earlier on. These companies are global companies, not just their customer base. The suppliers to them are globally based. You know, they don't just exist in one factory in one town in America. They buy from thousands of suppliers all over the world, including South Africa. You know, so you've got to be careful. There is a negative to the Trump protectionism because they've got to get what's necessary to do their product from all over the world, not just within America.
Well, this morning again, I was up early watching Capital Connection, and Trump is now making overtures to Chinese President Xi Jinping, and that's a new kind of stance because, of course, I don't know how that fits in with America first. And, you know, there were very heated arguments about the one China policy coming from the Trump camp. But anyway.
Sounds good. Look, I think less executive orders and more, you know, trying to govern and get through the icebergs is going to be a good thing.
Let's talk